Dollar rises as global stocks fall. Trump's tariff deadline, inflation concerns, market update.
U.S. dollar is on the rise while the global stock index experiences a decline, with inflation and tariffs taking center stage in the financial discussions. Summary of key points. U.S. stock index closes lower, despite positive earnings from Meta and Microsoft. The dollar strengthens against the yen, as the Bank of Japan maintains interest rates and raises its inflation forecast. Mexico's peso appreciates following news related to tariffs. Investors are looking for clearer trade policies as the August 1st deadline approaches. On July 31, 2025, in both New York and London, the U.S. dollar index saw an increase, while the MSCI Global Equities Index fell. This shift occurred as robust earnings reports from major companies were countered by growing concerns over inflation and investor unease regarding President Donald Trump's impending trade agreement deadline.
In a significant move, Trump granted Mexico a 90-day extension to negotiate a broader trade deal, temporarily delaying higher tariffs. However, it is anticipated that he will impose increased duty rates on most other countries as the deadline looms. Earlier reports indicated that U.S. inflation rose in June, driven by tariffs on imports that began to elevate the prices of certain goods. This development aligns with economists' predictions that inflationary pressures are likely to intensify in the latter half of the year. Additionally, fewer Americans than expected filed for unemployment benefits, and labor costs in the U.S. for the second quarter rose slightly more than anticipated, reflecting a boost in wage growth. The Federal Reserve opted to keep interest rates unchanged during its recent meeting. Chair Jerome Powell emphasized the need for more data before making any decisions regarding rate adjustments in September. This announcement contributed to a decline in equity markets and drew further criticism from Trump. Despite some initial support from better-than-expected earnings from tech giants Microsoft and Meta platforms, these gains dissipated by the end of the trading day. Kevin Gordon, a senior investment strategist at Schwab, noted that the current economic data seems to reinforce the Fed's more aggressive stance. While investors are anxiously awaiting the payroll report due on Friday, alongside the tariff deadline, Gordon remarked, "This week has presented an overwhelming amount of information, leading the market to remain in a narrow range as it processes everything." He pointed out that while large-cap stocks are showing strength, smaller companies are struggling to cope with rising costs. Currently, only sectors like communication services and certain areas of technology are providing support. Overall market breadth is quite weak, he added. The Russell 2000 Small Cap Index fell by 0.93%, and the S&P 600 Small Cap Index dropped by 1.17%. On Wall Street, the Dow Jones Industrial Average decreased by 330.30 points, or 0.74%, closing at 44,130.98. The S&P 500 also saw a decline of 23.51 points, for 0.37%, finishing at 6,339.39. With only 2 of its 11 major sectors reporting gains for the day, the Nasdaq Composite experienced a slight drop of 7.23 points, or 0.03%, closing at 21,122.45. For the month, the S&P 500 has risen by 2.17%, the Nasdaq by 3.7%, while the Dow has seen a modest increase of 0.08%. Meanwhile, MSCI's Global Stock Index fell by 5.31 points, or 0.57%, to 929.02. In Europe, the Pan-European Stoxx 600 index closed down 0.75%, marking a low not seen in over a week. European investors expressed disappointment over earnings reports from companies like Sanofi and Ferrari, and beverage manufacturers faced challenges due to a 15% tariff imposed by the U.S. U.S. dollar's monthly outlook. In the currency markets, the U.S. dollar is poised for its first monthly gain of 2025 against major currencies, bolstered by expectations for clearer trade policies and the resilience of the U.S. economy. On this day, The dollar index, which measures the greenback against a basket of currencies including the yen and euro, rose by 0.26% to 100.05. The euro increased by 0.08% to $1.1413, and the Mexican peso strengthened by 0.23% against the dollar, trading at 18.854. Conversely, the dollar appreciated by 0.84% against the Japanese yen, reaching 150.76. Following the Bank of Japan's decision to maintain interest rates and revise its inflation forecast upwards, the Korean won weakened by 0.21% against the dollar after Trump announced a 15% tariff on imports from South Korea, which is expected to invest $350 billion in U.S. projects and purchase $100 billion in U.S. energy products. In the U.S. Treasury market, yields on longer-dated bonds fell ahead of the anticipated July jobs report, reversing a previous increase following Powell's comments. The yield on benchmark 10-year notes decreased by 0.6 basis points to 4.372%, while the 30-year bond yield fell by 1.5 basis points to 4.8979%. However, the yield on the 2-year note, which typically aligns with Federal Reserve interest rate expectations, rose by 2 basis points to 3.957%. In the oil market, prices dropped by 1% after 3 consecutive days of increases, as investors weighed the implications of extending the existing trade deal between the U.S. and Mexico, and a surprising increase in U.S. crude stockpiles. U.S. crude settled down 1.06% or 74 cents at $69.26 per barrel, while Brent crude fell by 0.97% or 71 cents to $72.53 per barrel. Gold prices saw an uptick as traders sought the safety of this precious metal amid tariff uncertainties, with spot gold rising by 0.51% to $3,291.55 an ounce. This report was compiled by Sinead Carew, Alan John, Nell McKenzie, and Gregor Stewart Hunter, with additional contributions from Ankur Banerjee. The editing was overseen by Barbara Lewis, Andrea Ricci, and Jamie Freed.